Hello and welcome to Markets Today. I am Terryanne Chebet. Now, when President Uhuru Kenyatta declined to sign the finance bill recently and recommended that members of Parliament repeal the rate cap, many Kenyans are now asking, is this the end of cheap loans? Now, the interest rate capping law became operational in 2006. It was implemented following concerns raised by the public regarding the high cost of credit in Kenya, viewed as a hindrance to credit access by a large segment of the population. Implementation of the interest rate cap law was expected to give way to the era of cheap loans as well as to increase access to credit. However, a World Bank report says that the law on interest controls has had the opposite effect of what was intended, leading to a collapse of credit in micro, small and medium enterprises, shrinking of the loan book, that's of the small banks mostly, and reduced financial intermediation. We will be speaking to Audrey Kaptum, a research analyst at AIB Capital, who will be giving us an insight in terms of which way forward based on a report done by AIB Capital on the interest rate caps. Audrey, thank you so much for joining us on Markets Today. First of all, let's just look at the expected scenario. So Parliament is expected to sit down anytime. Yeah. What are your expectations?
Majorly, the MPs might go with either two options. So they might decide to retain the caps itself, or they might decide to not retain it. Mm-hmm. So now, in terms of retaining it, that means they'll have to reject the presidential assent. So that means they'll also need a quorum of like 93 MPs. So although in my opinion, the MPs might decide to retain it, because they see that most Kenyans, in their opinion, most Kenyans are suffering because of high interest rates, and so they would want the rate cap, and it's helping them. And also, they see that it's also leading to the rate cap itself. It's also leading to a lot of private sector credit growth. So there might be a bit of debate, but the other option is that they might decide that they don't want to retain it. They might decide to either they might increase the cap itself into 4% or more, or 5%. But if they decide that they don't want to retain it, banks, what is expected is that banks might increase their rates to approximately what was before, which almost reached 30% before. Yeah, so
that's through interest or through other ways, because there's also reports that show that banks have become clever and have used other ways of introducing some sort of extra fees into loans. Is that expected going forward, or is that, as economists, when you sit down, how do you see banks working around that?
So currently, banks are working around the cap by increasing the fees, mostly on digital loans. So you'd see they might be charging an interest rate of 10%, but the fees would lift it up to close to 17%. But now, when if the rate cap is removed, I think banks will aim at reducing the fees, since now they're allowed to increase their interest rates. So they might reduce the fees, but I think the rate might be standing at the same amount. Yeah.
There's a lot of politics also around, the issue of the rate cap, given that it can give politicians quite a strong political card, to play with, to say, we made sure that you have cheap loans. And there's a sense that Kenyans are not really getting the truth about the impact of the rate caps. In your opinion, what has the impact been?
Since the introduction of the rate cap, actually, we've seen a decrease on the private sector credit growth, and this has mainly affected the loans that people are being given, mainly with businesses. So now, since businesses cannot really access loans, their activity also goes down. Because you've seen, even in the real estate sector itself, its activity has gone really down, because developers now, they cannot really access loans, so the construction has really gone down. And also in trade matters, since people are not really, businesses are also not accessing the loans, now also the activities, the profitability has also gone down. Yeah.
There's a part in your report that I picked up and I found quite interesting, which was from part of the feedback during the previous debates in Parliament, where the arguments were being made for maintaining the caps.
Yeah.
And one was that the Treasury is not in touch with the public, as Kenyans want the cap to remain.
Yeah.
But do they want the cap to remain because they want caps or because they want cheap loans? And maybe would that be the easier way to actually communicate to Kenyans about the impact of rate capping as a principle?
So I don't really think Kenyans would know, or would really, the typical Kenyan would know the effect of rate cap. Maybe they just see lesser percentage of interest rate is way cheaper for loans. But now they're not seeing in the perspective that if banks see that they lend to you at 13% or lower, they don't see any profit coming from you. So they'll decide to go to the government, which is giving them almost the same percentage and lower risk, because you're higher risk.
At almost zero, almost zero risk.
Yeah.
It's interesting you mentioned that, because I was just reading a CBK report that was done earlier this year that reported that 18 commercial banks have moved funds from private businesses to government securities. And of course, we've seen, throughout the year, the impact to SMEs, most of them closing down, a number of, hundreds of thousands losing jobs from that particular perspectives. Are there recommendations on how to go around this issue? Especially to please both, to please both government, to please Kenyans, and to make sure it's fair ground for the banks as well.
I'm not sure if we can really get to a win-win situation for both sides, because if they decide to remove the cap, it will favor the businesses and SMEs, since now they'll have access to loans, and also if they remove the rate cap, the government loses, since now more people won't really be borrowing from the government. And if they decide to retain the rate cap, people will still lean to the government and leave out the SMEs. So I don't think it can be 50-50, maybe 70-30, yeah.
Wow, okay, so another point that came through from your report, there's no guarantee that a removal of the cap will lead to a pickup in lending to SMEs. And that's a catch-22, because, most people say, and if we read from reports from the World Bank, from, other financial organizations as well, they say because SMEs were crowded out of that space, then, most of them got to where we're seeing today. But still, we don't have a guarantee that SMEs, will still pick up.
Even when they get the loans.
So what happens now?
I guess if we look at before how SMEs performed before the rate cap, there was a pickup in their performance. So I guess we can trust the previous performance, because if they had access to loans before and their performance was great. So now if the rate cap itself is removed, their situation might pick up to where it was before. Not immediately, but gradually. Yeah. So
there's a conversation around central bank and the impact of rate caps to monetary policy, and of course the consequent independence, so to speak, of the central bank, and how they play into the whole value system in terms of how money and the interest rates moves around. So my question is, they say the CBR, the central bank rate, has been rendered useless now. So, how can that change and still ensure that the monetary policy functions well? SMEs still have access to credit, and still, the growth is still spurred in the economy.
If the rate cap is removed, we see that, or we expect that the Monetary Policy Committee might reduce the CBR so as to accommodate the SMEs, so that banks they might see that the rate has been lowered, so they don't really charge high interest rates. So that will be positive for SMEs, and also banks will still be open to lending. So it'll have benefited both sides.
Okay. We have seen reports that central bank predicts that the interest rate cap law will slow down economic growth this year by 0.4 basis points, of course, due to the lowered credit to small businesses and private person. And now all eyes are on Parliament as they get back to debate the way forward for the interest rate caps. I've been speaking with Audrey Kaptum, research analyst, AIB Capital. Thank you so much for making time to be on Markets today.
Okay, you're welcome.
You're watching Markets Today. Keep watching Metropole TV. My name is Terryanne Chebet. Have a good afternoon.